What's up, family? We have some very alarming information out right now that is affecting millions of Americans. We could be on the verge of another financial crisis if things don't turn around very quickly. We just saw the biggest bank collapse since 2008 during the financial crisis, and more people are fearing that this could just be the beginning. And now people are unable to get their money out of their bank accounts at the ATM machines. This could be the biggest fear we have seen in over a decade. Yes, the biggest question right now that people have is, how does a bank collapse in 48 hours? And guys, that is exactly what we saw last week. And here is basically the timeline of how Silicon Valley Bank ended up collapsing in 48 hours. Now, it is a very complicated situation in how they ended up failing, but here is the short version. First, there was the Federal Reserve, which continued to raise interest rates a year ago to tame inflation. The Federal Reserve ended up moving very aggressively, and because of the higher borrowing costs that was sapped on the momentum of tech stocks that had benefited from Silicon Valley's bank. Yes, we are talking about the highest interest rates that we have seen in over a decade, in which they also eroded the value of long-term bonds that the particular bank and other banks ended up gobbling up during the era of ultra-low, near-zero interest rates. And yes, guys, Silicon Valley Bank, which is $21 billion bond portfolio, was yielding an average of 1.79%, which is horrible, guys. Yes, the current 10-year Treasury yield is about 3.9%, but they bought these a long time ago, and they have been holding on to them since then. But at the same time, venture capital began to dry up a little bit, forcing startups to draw down funds held by the particular bank, so that the bank was sitting on a mountain of unrealized losses in bonds, just as a pace of customer withdrawals was continuing to escalate. And yes, guys, just to sum it all up, yes, because of this information, different tech companies as well as customers started going to the banks trying to retrieve their money, which this is particularly called a bank run, which is particularly involved with individuals are trying to go to the bank and withdraw all their money, which you guys know that banks typically only keep about 10% of the money that you deposit into the bank. And that's because of the majority of the money that you deposit into the bank, that is pretty much invested into other things like these particular treasury bonds. And that is why all these individuals trying to withdraw all their money all at the same time is pretty much considered as a bank run. And yes, we have this particular description of a bank run. It says right here that a bank exists on a collective belief that when you put money in, the bank will still be there along with your money. And that is not always the case. But when enough investors start withdrawing out of worry that a bank will run out of money, it can cause others to scramble to withdraw their funds as well. Bank runs are triggered by fear, and fear is a bad thing for business. And everyone is seeking to withdraw all their money all at once can cause a bank to fail, because not all of the money is actually in the bank in the first place. And what begins mostly as fear of bank insolvency becomes real insolvency, because no one wants to be the last person in line to get their money out of that particular bank. So again, that is pretty much why this particular bank ended up failing, and mostly because of the interest rates continuing to rise in these banks. This particular bank specifically had been holding on to these treasury bonds that were pretty much sinking because of the high interest rates that we have incurred over the past few months or so. So anyways, guys, we are also seeing things like this particular person, which was a CEO of a tech startup company, and she put out a message last week and said that she had at least $10 million in the Silicon Valley Bank, and she says she experienced the worst 18 hours of her life. And guys, that's because she just doesn't know whether that money is going to be available for her or not. We know that the money is pretty much insured by the FDIC, which only goes up to around $250,000. But holding $10 million in this bank, guys, she can pretty much lose 95% of her money. And then we also saw a very startling information in regards to the employees that worked for this particular bank. And this is right before the U.S. government ended up seizing the bank and shutting it down. We found out that the SVB employees, they actually received their bonuses just hours before the government took over this particular bank. So again, it begs the question, were they doing something wrong here, or were they operating in line Well, I think that is a particular gray area, but we will find that very soon. And guys, a lot of Americans are worried right now. They don't know whether or not their particular bank, wherever they bank at, is going to have their money. So that is causing the fear in the economy, fear in the American people, in which a lot of people are going to the banks right now, this week, as of today, trying to retrieve and withdraw their money from the bank. And that is why we hope that we hear something from the Fed chairman. And that is why we hope we hear something from the government. Hopefully they will step in. Hopefully FDIC will say that they are going to be supporting and providing these individuals a refund of their money that has pretty much been held up in this particular Silicon Valley bank. But guys, again, like I said, the American people, they are worried as of now. And yes, guys, also in that news, guys, as of Sunday night, regulators ended up closing New York Signature Bank. And they are saying that depositories will be made whole. That is a good thing. But like I said, depending on what the FDIC is insured at this particular Signature Bank, that is going to determine how much people can actually be assured that they will actually get their money back into their pockets. So again, the regulators have shut down New York Signature Bank as of Sunday evening. And yes, guys, we did hear from the Treasury Secretary, Janet Yellen, in which she already put out a statement and said that, look, there will be no bailouts for the Silicon Valley Bank. And also there will be no bailouts for other banks as well. So we have got to do something right now in making sure that the American people, the depositories, they get their money that they deserve, that they put into this bank that they thought that was going to be safe. So again, guys, this particular time around, unlike 2008, we probably won't see any bailouts coming our way as of yet. Currently, that is a statement coming from Treasury Secretary Janet Yellen. But I do have some good news to share with you guys, and that is because we did hear from the U.S. government as well as the Fed chairman. Now, I will say we do have a bit of good news, and that is because we did hear from regulators on Sunday evening as well as the United States government, in which they have decided they have put together a plan, and this particular plan is going to step in and save a portion of the people's money that had invested in SVB, Silicon Valley Bank, and those people will be able to access their money very, very soon. Now, again, we are talking about the FDIC insured only up to $250,000 in this SVB bank. So those individuals that had more money invested in their accounts, we don't know where that is going to go as of yet. But so far, majority of Americans, majority of people have less than $250,000 deposited into this particular bank. So again, the United States government has said that they are now going to be stepping in, and they are saying that the people and their funds that they have deposited into this particular bank will be available very soon. They are trying to figure out the details. They are trying to take over sometime today of this particular bank. And again, this is definitely some positive news in the right direction. Number one, this is going to make sure that Americans, those individuals that have their money deposited, that they will actually be able to get their money back very soon. And the second good important information about this is hopefully this prevents other banks and other people doing these particular bank runs. Hopefully it doesn't cause fear that could happen to other banks as well. So the good news is that U.S. government wants to step in. They want to do something about it. They don't want this to continue on and to happen to other banks, because that could pretty much trigger a huge financial crisis similar to the one that we have saw back in 2008. So again, guys, this is definitely some positive news. And it says that officials will unwind both SVB and Signature Bank sometime this week, and they want to ensure that depositories will have full access to their funds on today, on Monday, guys. That is the statement that came out on Sunday. We still need to hear more information. Hopefully we will hear something about it sometime this morning. But as of now, they are putting out a statement that they are going to make sure that American people have access to their money sometime today, or at least by the end of this week, depending on how things go with the seizure of these two particular banks, Silicon Valley Bank and New York Signature Bank. So again, guys, this is definitely some alarming news. You definitely need to be aware of it depending on where you bank at, especially if it is a smaller bank. This is definitely some important news, guys. You don't want to see your money wiped away clean. You definitely need to look up your particular bank or your credit union, see how much your money is being insured by the FDIC, because that is who's going to protect your money. You definitely want to be mindful of that information. And if you do invest or have your money with a bank that is not FDIC insured, you might want to look towards other options, guys. So again, this is the information that we are having right now. It is very alarming. Hopefully we don't see other banks following in this same trajectory. But again, guys, I hope all this information in this video was helpful to you today. Well, anyways, guys, hey, that's all I have for you today. But feel free to check out some of the items down below, because there are a few ways for you to be able to support this channel, as well as some opportunities for you to receive 12 free stocks from Webull that could be worth up to $3,000. Also, you could get the Amazon Prime membership for totally free for 30 days. If you are interested, check out the links down below. But anyways, if you enjoyed today's content and you want to see more, go ahead, subscribe to the channel. It's totally free. And if you like today's video, then go ahead and hit the like button for us. It really helps out this channel, as well as it tells YouTube to share this video with others. But anyways, hey, I appreciate you guys stopping by and watching, and I hope to see you on the next video. Peace.